Welcome to Markets Now. I'm Michelle Rook along with John Heinberg with Total Farm Marketing, and we're seeing lower prices in the entire grain complex with some double-digit losses in portions there. And over in the livestock, we're lower except for deep deferred feeders and some of the hog futures. And John, let's talk about corn and soybean prices. Funds are back liquidating today. Is it a function of the quick planting pace, or what is the problem that has them hitting the sell signal?
We got a combination of factors going in. First, a little touch in the outside markets. Consumer confidence came in pretty negative today, according to expectations. That's weighing on stock markets, like crude oil markets, things like that. So I think that's spilling over as also a little bit of momentum. But we know we got that planting pace a little above expectations, again, with most of the action in the south and the east. But then I still think the biggest factor is we're looking at the competing corn prices from Brazil as we're getting closer to that second crop harvest. And they got a significant discount to what we're seeing here from the U.S. side, and the market's trying to go ahead and tighten that price structure up a little bit at this point. But kind of a key area right through here that we need to see things maybe even hold today and into the end of the week would be nice. But it feels like the markets are on a bit of a slippery slope as the funds are pushing those, shortening those positions.
Yeah, we'll talk about key support areas here in a moment, but how much under our prices or South American values right now for corn and soybeans?
Well, soybeans, we're hearing about $2 is the premium underneath the May contract. So that, pretty significant discount there. Now we've shaved into that pretty aggressively, unfortunately, this week. On the corn side, again, we're watching prices. I saw today through a resource that they're getting down to their cash minimums in terms of where the government puts their price support in. So again, we're talking a significant amount in terms of number. And that was some of the reason why we saw that cancellation for corn yesterday. It was probably some extra bushels that China added on, and they could probably go ahead and move it to Brazil at a cheaper source. And so they stepped aside some of those U.S. bushels, which is another thing that just makes this market feeling very negative and a negative sentiment overall.
Yeah. And it's also why we've seen some soybeans imported into the United States over there in the Southeast. So how much lower do you think these prices are going to go in corn and soybeans? And what are you watching for support areas that need to hold?
I'm really watching the 605 area here on the July price. I know we're a little bit under it at the time of this recording, and we can see if we can hold that into the end of the week on weekly charts. It's kind of a bit of a trend line that's been building here, going all the way back to those July lows. So we'll have to watch this area. Same thing with the 540 area on the December corn. So we're at a spot this market kind of needs to dig in a little bit and maybe get a little bit of buying going into the May report. We'll have to see. But again, I think a friendly close where we come off the lows and have a solid finish might be just a bit of a signal that the sellers are going to dry up a little bit here at this window. Soybeans still got some more air underneath this market. I'm looking at that July low of about 1390 on the July contract. Still feels like that's an area that we could go test to. And the momentum continues to point to that direction at this time frame.
Yeah, wheat is not doing corn or soybeans any favors here either. And really this market, at least HRW wheat, is really believed in the idea that we're going to get some rain in some of those areas, right?
Yeah, you go look at the fundamentals from yesterday afternoon. We got crop ratings dropping again for winter wheat. We got planting pace behind for spring wheat. And what's that getting us today? Double-digit losses just on the prospect of moisture coming into the area. I mean, obviously, some of the rain we get might be beneficial, but maybe too late for some of that crop overall. But again, it's markets move on sentiment. The funds are short wheat. And again, they got a reason to be pushing that short position. And technically charts, breaking lower yesterday, continue to get some follow through selling today until somebody wants to step in front of this. And right now we don't have the news to do that.
What is it going to take to turn that market, John? What do you think?
Probably some type of outside source news, or again, just maybe we need to get into the field and realize how poor the winter wheat crop is with some actual estimates of yield. I think that could be something that unfortunately is going to take a little bit of time to do, but maybe something can happen in Ukraine. Obviously, a lot of changes going on there on a daily basis. I think the market's pretty numb to the Ukraine news until we actually get something physically happening. But at the same time, to me, it's going to take either a pop in demand or something that just says, that verifies that where this crop really is in terms of its size.
Yeah, demand's been killing us in that wheat market. And I know even the stories today that Ukraine's exports are going to be down is failing to move this market at all. What about this cattle market? Of course, we're in consolidation phase here. How much lower do you think we're going to go here before the funds step in to defend their long position? Is it all about what cash does this week?
To me, that's still going to be the driver here, is going to be the cash market. If we can stay steady, fairly firm with last week. I'm hearing mixed bids on both sides of the coin. I'm still watching the retail value, which still trading 300 plus on choice carcasses. Still, there's some meat on the bone. And the Packers are going to be looking for cattle. So if we can get a cash bid that keeps this market firm and that side, that'll still look that like June's undervalued. But I will admit the charts technically are pretty weak with that double reversal on top of this thing. And as we're consolidating right on support. So anything that would show some signs of weakness would make me a little more concerned about long liquidation here. But at the same time, I still think cash is king.
Yeah. And of course, that's been kind of the trend. We get cash confirmation and then this market shoots right back up, doesn't it?
Yeah, it does. I mean, if we're still sitting 175 on cash traded in the southern region, in June sitting at 164, we got April coming off the books here relatively soon. June's, $10 under the cash market. So it's looking a little undervalued at this time frame, but we'll have to be cautious here. I guess it's a window. Maybe we can put our spring high in and then we kind of fall back. As we're especially getting through the demand that's kind of built up here for the Memorial Day, the Father's Day weekends, we're kind of shift our focus away from that. And that could, again, soften some of those retails as maybe we hit a bit of a high here in the May window.
Yeah. The futures discount, though, I'm with you. That's really, really key here, I think, in terms of holding support in that market. How much of this has also been cattle hog spread unwinding? And is that why hogs are up here? Or have we finally started to see the funds covering some of this massively short position they have?
Well, we're starting to get some inklings that maybe that retail market for hogs wants to get a little footing. We look like we firmed up last week, tried to get over the $80 handle yesterday, and unfortunately slipped on the afternoon side. We're also seeing Chinese pork prices start to turn a little bit higher too. It's not coincidental when those prices tumbled, our prices continued their downslide. So it's another one of those combinations. The world's largest producer of pork, even though it's not into the export market, has got cheap prices. It's hard to rally. So maybe we're getting to that spot where we're getting a little change in the demand tone. Now we just need the cash market to come with us. And hopefully that can help bring this hog market higher and get them out of those shorts that the funds are sitting on with that over 26,000 short contract in that position.
No doubt, but the lean hog index has got to bottom first, doesn't it? We have not seen evidence of that.
I still think that's going to be the last piece of the puzzle, is starting to see the cash market firm up a little bit. Again, the opposite of cattle, the premium over the cash market for the summer months to the index right now just makes me extremely nervous. This could be a very limited rally if we don't see something start firming up and turning higher.
You mentioned the outside markets on the onset, and I guess I'm wondering, we have, I think, first quarter GDP coming up. You've got a Fed meeting. You've got PCE at the end of the week. Could it get kind of wonky and bloody here in the outside markets? And could that in turn continue to spill over here in this commodity sector?
There's just a lot of rumblings that the economy is not as good as everybody feels at this time frame. We're watching some of the earnings coming through in the equity markets right now. Some of them are actually surprising and being better than anticipated. But, does that still give the Fed a little room to raise interest rates? There's so many moving pieces on these outside markets that can easily jump into this marketplace. And again, just weigh on everything in a risk off mentality. You got crude kind of rolling over, see if it wants to go test some of the lower levels. Just on the supply and lack of demand, the global economic picture is still going to be an overweighing blanket on a lot of this. If things don't look good economically globally, it's going to be real hard for prices to maintain any sustained rallies.
Yeah, definitely feels risk off. All right. Thanks for joining us, John Heinberg with Total Farm Marketing, and that's Markets Now.